The country's import bill continues to exceed its export bill. Strike action, particularly in the auto sector, contributed to a slowdown in exports during the third quarter.
Our current account deficit, or our checkbook with the rest of the world, we're nearly negative at 7%. So we're spending 7% more on imports than we're able to earn with exports. And that's normally not a good situation because we're not growing fast enough to cover that deficit.
Schussler says when the US Fed begins to taper its stimulus program, the rand may likely depreciate further, triggering concerns about inflation, with ratings agencies also lurking in the wings with possible downgrades. But he says a weaker rand could also help turn the country's trade fortunes around.
It is going to mean that we are going to be able to become a little bit more competitive. Either we will not be able to afford all the imports or so on, but also ultimately maybe some of our exports, such as maybe food and wine and cars, can get a bigger market share outside in the world, and that will hopefully help us self-correct.
Schussler noted that consumer incomes rose by 2.1%, while expenditure was at 2.3% in the period, indicating on the whole that consumers continue to live beyond their means. Nompumelo Siziba, SABC News, Johannesburg.
It's becoming more costly to own a car in Gauteng. Petrol prices will go up by 7